Good afternoon, everyone. Today's video is about an unexpected turn that the Tortoise strategy has taken. Its premise is rather straightforward. Run a set of test algorithms on Binance on as many coins as possible, with low order sizes of course, then analyze the reports for the best performing coin and distance combinations, and then insert that whitelist into copies of the same algos but with high order sizes. The original version of the concept was described in diary number 52. Over time, the test algos were refined and made more focused in the following ways. First, limit the number of tested coins only to those with maximum leverage of 50 or 75. Second, eliminate the unpromising distances, especially the lowest and the highest ones. Eventually, the focus was further narrowed to only 0.95 and 1.55. Third, as described in the previous video for diary number 61, implement the aggressive take-profit approach. The tests have been running like that for over a month now. The intended use of the results was to trade on the flat market, since the volatile market was covered by the successful high Bitcoin strategy, as described in diary number 59. Nevertheless, the test algos were not limited to any particular level of Bitcoin volatility. The filtering was done at the analysis stage in Excel. So, the most recent round of analysis looked like this. For flat Bitcoin 5-minute delta between 0 and 0.4, the test result was minus 43 USDT for an ROE of minus 300%, although with a pretty nice average profit of 0.35%. Before proceeding to sort the wheat from the chaff for whitelists, a spontaneous idea occurred to check out the other Bitcoin ranges. 0.4 to 0.5. Interesting. The average profit and the average loss are pretty much the same, but the profit-to-loss ratio is good enough for a tiny overall profit of 2.4%. And then this happened. What? Plus 176%? Plus 11%? Plus 13%? Put together, between 0.4 and 1.6 in Bitcoin 5-minute delta, the overall ROE for test algos is above 200%. Anything over 1.6 and it's back to disaster land, much like anything lower than 0.4. To underscore how momentous this is, these are just stupid test algos with no curated whitelists whatsoever. They simply traded on anything at leverage 50 or 75 and no simple delta filters whatsoever. An extraordinary surprise. Turns out the young Ninja Tortoise really likes the medium Bitcoin volatility, but gets really bored at low volatility. To make sure this wasn't a fluke, a consistency check was done across all available dates. The lowest volatility was consistent, sure enough. Consistently red, that is. 0.4 to 0.5 was neither here nor there. But the next one up was nothing short of miraculous. Only 3 red days out of 31. The higher we go, the less data there is, but it still looks consistent. In the newly discovered BTC range of 0.4 to 1.6, which can be dubbed medium volatility, no matter how you cut it, whether it's buy or sell, or 0.95 or 1.55, these specific algos are profitable all around. A quick decision was made then and there to immediately hop on that train with 1000 USDT order sizes, with a few small tweaks, such as cutting off the 24-hour volume at 500 million, cutting off the 3-minute coin delta at 4%, just in case, and selecting just the top 50 overall best performing coins without regard to side or distance. So, what are the results so far? In 5 days, the mid-BTC algos made 97 USDT for an ROE of 9.3%. And that is despite things like this, where one shot took away 44 USDT. And remember, these algos were rather quickly thrown together and can be further refined for this newly discovered application. In those 5 days, the high Bitcoin strategy is still the boss, bringing in 190 USDT. But the mid-BTC is not so far behind. And the flat Tortoise remains pretty much unmoved by flat BTC. So, now it is obvious what was being missed in the middle. When the flat Bitcoin threshold is surpassed, the high Bitcoin algos jump straight up to the distance of 1.7 and wait there, skipping over what happens in the middle while the volatility is still moderate. The mid-BTC approach seems to be bridging this gap rather well so far. And there's still work to be done to make the flat market just as appetizing for the Tortoise. If you want, subscribe.